Much of the country, but not all, is in varying degrees of a buyer's market. If you happen to be shopping in a buyer's market, get greedy, get aggressive, but remember, have a plan, follow up, follow up, follow up. None of these deals will be done on the first offer. Las Vegas real estate is #1 market in the country for most active inventory growth. Yes, folks, according to realtor.com, Las Vegas inventory is up 77.6% year on year. And let me just tell you, I love it. Sometimes it is better to be lucky than good. As somebody who has been shopping for a rental property in the Las Vegas area, let me just tell you, I am ecstatic that inventory is up 77%. There is still plenty of wish pricing, but let me tell you, this is the kind of market, this is the buyer's market that I would be looking for. If we were shopping last year or the year before where inventories were at or near record lows, it would have been extremely tough. And I probably would have had to buy via a wholesaler. In a market like today with active inventory up 77%, I am seeing more and more properties that I will be writing offers on, likely with six-figure discounts. Again, the strategy is very simple, looking to get a great deal. I will be writing offers with a cash number, likely writing an offer if I can verify equity with a seller financing offer. Ultimately, my goal, again, I've been very clear, my goal is to leverage the 50, 40, 10, 90% CLTV loan from Velocity Mortgage. Again, the whole idea is to find a motivated seller, someone that is at least interested in discussing seller financing, and then get to a position where I buy a property with 10% down, get a blended interest rate below market, get a six-figure or near six-figure discount, and of course, I get an amazing yield. The fact that Vegas real estate has seen a jump, according to realtor.com, is just amazing timing for myself. Sometimes it's better to be lucky than good. Just in case you're happily shopping in DC or Raleigh, I got good news for you. Washington, DC, active inventory is up 63.6%. Raleigh comes in third place, according to realtor.com, at 56.4%. Again, much of the country, but not all, is in varying degrees of a buyer's market. If you happen to be shopping in a buyer's market, get greedy, get aggressive, but remember, have a plan, follow up, follow up, follow up. None of these deals will be done on the first offer. Let's talk about inflation. Yesterday, we got CPI, and generally speaking, a little hotter than expected. It pretty much had something for everybody. If you were looking for tariff inflation, there was plenty. Furniture, games, electronics, things of that nature. If you were looking for deflation, there was plenty of that pretty much across the service sectors, plus cars and autos and things of that nature. But PPI, Producer Price Index, often seen as a leading indicator to CPI, was better across the board. There is nothing to say about PPI except no inflation, no inflation, no inflation for the month. Headline, month on month, 0. Core, month on month, 0. No tariff inflation, not in the pipeline. The chances of a July rate cut still are single digits and should be. But I think I said this about 4 weeks ago on our Friday financial wrap up with Ty, that I actually thought the gap between the July and the September meeting were too long. I believe I did. I should go find that clip. And I said, be careful. We might get an August emergency rate cut. Play this out with me, right? So again, we're getting inflation numbers that are better than expected. I think there is a general feeling that the job market is weaker than expected. The Fed's going to do their thing at the end of July and then not meet again in an organized fashion until September. However, they do have this, Fed event in August in Jackson Hole. I wonder if the job market got weak enough and the inflation prints were weak enough that if we could get an emergency cut in August, I don't know. we'll see. Again, it's really early to tell, but I do remember having that conversation with Ty, and I'm like, yeah, you're right. That could happen. We did get some Fed speak, a bunch of Fed speak yesterday. Fed President Logan, tariff impact unclear until the fall. Again, I think more and more people are talking September. June CPI means PCE will increase. Again, one of the things about PCE that few understand is once you have CPI and this morning PPI, you can take those metrics, put it into a formula, and you can pretty much nail what PCE is. And according to Fed President Logan, PCE will be going up. Again, hard for me to believe the Fed will be cutting rates into rising inflation. Fed President Collins, seeing a slowdown in labor. That's not good. I expect downward pressure on employment and growth. Hello, stagflation. Tariffs are weighing on our strong economy. Core inflation to be around 3% by year end. I'll actually take that bet. I do not believe, looking at the base effect and what is coming with disinflation, demand destruction, I do not think core inflation will be 3% in December. I think it will be much closer to 2.5%. But again, Fed President Collins obviously has a lot more data at her fingertips. So again, probably lean towards what she's saying. Fed President Barkin, more price pressure coming from tariffs. Tariffs are the boogeyman. Again, whether they are one-time level sets or working their way through the supply chain, the Fed sees it coming. It is the boogeyman for them. Interesting note about PPI. Again, the experts were polled by Bloomberg. They had 50 noted economists make predictions about PPI, and all 50 were too high. Yes, folks, that's how shocking the print of 0.0 was. Not a single economist expert got it right. They were all too high. They all believed the tariff narrative that it was going to start coming through hot and heavy, but we shall see. What else? Goldman Sachs, again, we're starting to get earnings. Goldman Sachs beat top line, beat bottom line. Equity trading was responsible for Goldman's big beat. Who else do we got? Bank of America. Bank of America actually missed on revenue and beat on earnings, so think top line and bottom line. It was the fourth consecutive quarter of rising deposits and loan growth. It is very interesting to me to see across the big banks, the loan growth is being identified as one of the leading performances. Morgan Stanley beat top line and bottom line, where wealth management drove solid growth with an additional $59 billion in net new assets. Pretty crazy. Albertsons, a grocery store, beat top line and bottom line. Digital sales increased 25%. Their pharmacy, half the growth came from GLP-1s. Lots of people going on GLP-1s apparently. Although Albertsons did highlight margin pressure coming. Albertson highlighted some revenue growth, but saw that margins would be compressed, likely because of tariffs. So we will see what goes on there. It is Wednesday, so Logan Montashami is doing amazing work about mortgage applications. Mortgage applications, depending on how you want to look at it, you could say negative. Mortgage applications crashed, collapsed, fell off a cliff, 12% week on week, or you could step back and realize they are still up 13% year on year. It is the 11th straight week of double-digit more growth, week on week, year on year. You got it. It's actually the 24th week of growth in a row. So we had 11 weeks of double digits, but we had 24 weeks of mortgage application growth. So again, very interesting. Zillow came out with their national home prices for June, increase of 0.4. Yes, folks, still going up. I know there's lots of folks that are calling for a negative number of 5 to 10% for the year. I don't know how you get there when we're still at 0.4 in June. I think you're running out of the calendar to get to your 9 or 10% call. But hey, we'll wait and see what happens in the future. And again, the 0.4 is still a deceleration. We are clearly decelerating. Remember, folks, I think July and August will ultimately prove to be the bottom in hindsight. But let's get through the next 2 months and see how we are doing. I've got great news for our school community. We are starting to fill out the schedule for Sunday conversations. I want to let you know about a couple that are coming up that you need to attend. Again, remember, if you can work with Mark, the financial firefighter, and get your first month comped or refunded or rebated or whatever you want to call it, this Friday, we don't do this a lot. The first time we did it was with Thatch because he is the man. But this Friday, we've got Coach Carson. Coach Carson is going to come inside our school community, interact with you, answer your questions, give you some advice at 8 a.m. So July 18th, 2 days from now, you, if you are a part of school, will get the opportunity to interact and network with Coach Carson, 8 a.m. on Friday. Then Sunday, just 2 days later, the accountant to the stars, Bob Langworthy from Maine Bean Counters, he'll be going live in school, this time at 9 a.m. Usually we go at 8, although I'm making an exception for Bob, given how busy he is. We're going to be going live at 9 a.m. this Sunday. I think that's the 20th. Next Sunday, we've got Casey from Brick by Brick. That will be July 27th. August 3rd, we've got Christian Osgood coming up from Multifamily Investing. And then, folks, on August 9th, which will be a Saturday, we're going to start announcing speakers. On August 9th, you're going to get to meet one of our speakers at our Vegas event. And then on August 17th, it will be another Meet the Speaker special. Again, I'm going to withhold the name, just to let you know that we will be introducing speakers. So again, we've basically got the next month of speakers lined up. So again, join school. This is part of the value. Again, live Q&A sessions with millionaires, in most cases, multimillionaires. So I hope to see you in there. I guess the last thing I will say is President Trump wants the Fed to cut 3 full basis points. That's 300 basis points, 3 percentage points. He says that will save us $1 trillion. There we go. I guess one more thing I have since it's here. Empire State Manufacturing. This is something we got yesterday, but I did not report on. Last month was very negative at negative 16. It was expected to get slightly better to negative 9, still contraction. Bingo, bango, it is now 5.5. It's actually a positive number, a big, big beat. Sarah, the question, these are all the times I gave were Pacific. So this Friday, 8 a.m. with Coach Carson, 8 a.m. Pacific. That will be 11 Eastern. It will be 11 Eastern. Thank you for that. I usually say that, but yes, Eastern. It'll be 11 Eastern. And then on Sunday with Bob Langworthy, that will be noon Eastern. So again, lots of great talks coming up. You should join school. The community is worth the price of admission, 67 cents a day. Millionaire conversations, free education, networking. I hope to see you there. Sign up today.